Hi, my name is George Tallabas, and I'm an associate broker with RE/MAX Executives here in Southwest Idaho. Today is Monday, the 4th of May, 2020, and I wanted to make this video all about home buyers. And whether you're a first-time home buyer, second-time home buyer, third time, or whether you are an out-of-state buyer, I wanted to let you know what your options are. There are three major types of loans here in the country: conventional loans, FHA loans, and VA loans. And with conventional loans, you need at least 5% of the sales price required for a down payment is required for a down payment. With FHA, 3.5% is required for a minimum down payment. And with VA, of course, there is no down payment. That's for veterans. Anyway, on all of these loans, you're going to have closing costs on top of the down payment. How much are the closing costs? You can pretty well figure that on any type of loan, whether conventional, VA, or FHA, your closing costs are going to run really close to about 3% of your sales price. So, or the amount that you're borrowing actually. So 3% of the amount that you're borrowing will be required for closing costs. And with all of these costs, if you have a blood relative that can gift you any part of the down payment or closing costs, that is acceptable. Idaho Housing, also in Boise, has a program for first-time home buyers where they will help finance you the down payment for your home. You'll still have to come up with the closing costs, but they'll help you finance your down payment. It'll be added to your loan amount. Also, I wanted to mention to you that in order to qualify for a loan, what a mortgage lender is going to do is they're going to take your total payment estimated for the loan that you want. They're going to add to that your car payment, your credit card payment. All of your payments are going to add them all together, and the total of them must not exceed around 40% of your gross income. Now, if you're someone that has stellar credit, they'll usually let that slide a little bit above the 40%. But on an average, 40% is the maximum that all your debt can equal compared to your gross income to qualify for a loan. The big thing that I wanted to mention to you that I run into all the time is that any type of loan that you're going to get, you're required to have at least 2 years experience on the last last job that you've had. Okay, whether you've been in the workforce for 20 years and you've had 3 or 4 different jobs, the last job that you had you have to have at least 2 years experience with that job. I get a lot of out-of-state buyers calling me. They want to come into Idaho, they want to buy a home, and they were in construction for 20 years in Idaho, or in California, Washington, wherever, and they want to move into Idaho. And they're going to take a whole new line of work, and they're so excited. And then when they find out what I tell them about this 2 years required for a new job, they become very distraught. But that's the truth. If you're out of state and you're relocating into Idaho, if you've had a job in that other state, as long as you're still doing the same type of work in Idaho that you were doing where you came from, you're okay. But if you're going to come from out of state and move into Idaho and do a whole different line of work, you have to have 2 years experience in that new line of work before you qualify for a loan. I hope this is informative to you. I've got wonderful mortgage brokers on my team that can answer any questions for you that you might have that I don't have the answer to. I'll have my information at the end of this video and down below in the description. Contact me and I'll connect you with one of my mortgage lenders that can take care of you. Thank you and have a great evening. Bye.